good session for the Aussie share market, James. In fact, if we have a look over the last 6 years, we've only seen 3 times where the market's closed above 5,500 points and only 9 sessions where we've hit over 5,500 points. Well, today's session means it's 4 times that we've closed above that 5,500 point mark, closing at 5,510 points. Of course, the highest that we've been in the last 6 years is 5,554 points, which we reached on the 29th of April. So I think the key at this stage is that we see the market sustain this level in the next few sessions, and that would add confidence to the market. So a good day for the Aussie market, up by 0.3%, despite the US share market being down 0.5% overnight, and despite the Japanese market also coming under a fair bit of pressure during the Asian session, with the Nikkei down by 1.1% after those first quarter GDP numbers managed to impress an annualized growth rate of 5.9% for Japan compared to expectations of 4.2%, and that means, of course, that expectations around quantitative easing for Japan flying out the window there. So the good news in terms of economic news was bad news in terms of the share market. On the local market, though, was consumer staples, which took the spotlight. That was the best performing area, while the materials sector came under pressure, as did the Shanghai Composite in China. So that may have had an impact as well, with the Shanghai Composite down by about 0.8%. But all in all, a fantastic day for the market. There were also some stocks which performed very well. One was CBA, which managed a new all-time record high. There were some also impacts from the budget that continued on as well. Lend Lease and Leighton's are probably the 2 stocks which are most leveraged to infrastructure. And if we have a look at Lend Lease, we saw a year high being reached there, the stock up 1.3%, and Leighton shares up by 6.6%. So a pretty impressive performance for those stocks as well as the Aussie market today.
Mike, or so I think it was in the end. I mean, it just keeps going and going.
It's very hard to fight the momentum. Commonwealth Bank reaching an all-time record high once again today. It wasn't just Commonwealth Bank that was doing well, though. In that sector, we saw Westpac also performing well. And around the market, it was a broad group of companies which actually saw multi-year highs. We saw Woodside Petroleum reaching a year high, Spark Infrastructure, Fairfax, just to name a few of those companies. So the momentum on the Australian share market does remain quite positive, and I think the real test is managing to hold that 5,500 point level. Now, Michael mentioned the volatility index, and that's quite important for returns on the market as well. Generally, when we do see a drop in volatility and low volatility, that tends to be good news for long-term investors and bad news for traders. Now, it's good for long-term investors because usually it supports the market rising. It's bad news for traders because they usually need volatility in order to make their short-term profits. We just have a look at the volatility index in Australia. XVI is the code, and that's the volatility index on the top there. You can see that we have really reached the low in terms of volatility. And just to highlight what that low volatility means for share prices, if I try and overlay the Australian share market, the ASX 200 against that, you can see the low volatility conditions have been great news for the Australian share market. So the fact that we are seeing low volatility at the moment, I think good news for investors. As long as we can stay above that 5,500 point level, I think technically it's looking quite good as well.
Technically good for the Australian share market. So what Michael was saying, technically it was looking negative.
I think if you have a look at the international indices, which the Australian market does seem to get a lot of its impetus from, then we are looking a little bit shaky, especially those indices in the US, and a lot of traders do follow the US indices. So just watching the S&P 500 as well as the Dow Jones Industrial Average still near those record highs, and just watching to see that triple top as well to see where that one goes and whether we manage to break through to new highs. If we do see a breakthrough to new highs on the US stock market, that of course would be a positive for the Aussie share market. But the other area that we are watching for our market is, of course, the commodity space, and a lot of that is driven out of China. In 2014, unfortunately, we've seen some negative numbers coming out of China. So I think China is the big, potential genie in a bottle for the Australian market. If we see those numbers getting better, then that could be a positive for the Aussie market and give us an extra lift. But I think this takeover offer by Wilmar is a good one for Goodman Fielder. So they've upped their offer by 5 cents to 70 cents. And you have to remember that Goodman Fielder is a stock that's been under pressure for a while. And you have to think about what would happen to the share price if Wilmar walked away, and then we'd still see Goodman Fielder still having its problems and trying to work through the problems problems. Over the last 18 months, we've seen Goodman Fielder really trying to reduce its debt, selling off its non-core assets. So we've been facing asset sales, and I guess just having a look at its business, the supermarket was certainly hurting its business, but also some of those soft commodity prices have been relatively high, so that's been a pain as well for Goodman Fielder. So I think good news for shareholders, the offer being increased by 5 cents up to 70 cents. I think it is a good outcome. I mean, you only have to look at Grain Corp today coming out with its half-year numbers. Last year was traded, you know, the offer was around $13.20. Today we've seen the shares around that $9 mark as that Archer Daniel Midland's offer was unsuccessful. So for Goodman Fielder shareholders, I think it's a good result seeing their that offer being increased by 5 cents to 70 cents.